Surprise! Tesla stock is back in the green yet again today, up about 2% at the time of recording this video. And we need to go over all of your Tesla stock breaking news today, the upgrades, the downgrades, the option flows, and much more. But let's start with Dan Ives going on the offensive a bit against Ross Gerber's comments. Ross Gerber says more, quote, broken promises. We knew no one at Tesla was prepared or ready to launch a Robotaxi. Just like the many promises about Cybertruck that never materialized, there goes the Tesla MO. Dan Ives says the Tesla bear is back and tags Ross Gerber. If it's a 2-month delay for Robotaxi Day, that does not move the needle in our view on bullish AI thesis. Ross Gerber responds and says, except that no Tesla product or project has ever been on time, even close. Why announce a product that isn't ready? And Dan Ives responds and says, nature of the beast. Let's see what happens and if Musk responds. Now let's get into why Tesla stock is roaring back today, currently up about 3.5%. Well, number one, you do see this broader rotation that continues with some big tech stocks selling off. The equal weight S&P is up about 1% today. And you can also see the Russell 2000 today is well outperforming again, a very interest rate sensitive sector, up about 1.7%. There is growing optimism about rates that are going to get cut in September, which looks like a surefire thing at this point, as long as we don't get anything too crazy. You can also see the VIX today is down about 5.5%. So there's really no fear out there at all, which is pretty interesting because you did have PPI that came out today higher than expected. So producer costs are going up, consumer costs are going down. That's actually a bad sign for company margins and profitability. Core PPI came in at 0.4% month over month. The estimate was 0.2%. So these were some pretty bad numbers. But the markets brushed it off, and that just shows you how strong the bull thesis is right now, at least from the market's perspective. People want to see stocks go up, and they're out buying. So that's part of what is helping Tesla today, this overall risk-on narrative. And this is pretty material for Tesla as well. Citi has increased their Tesla price target by 50% to $274 from $182 while keeping a neutral rating. They say, quote, the analyst has been more constructive on near-term investor sentiment around Tesla, but says the strong stock run-up adds greater reliance on looming electric vehicle product and artificial intelligence catalyst. The Q2 delivery beat was also encouraging, which prompts increased estimates and supports Citi's underlying call for improving EV sentiment this summer. However, the firm believes core EV fundamentals alone are unlikely to support significant further upside from here in Tesla shares absent new products and AI catalysts. Which the commentary really doesn't matter. The fact that Citi raised their price target by 50%, it really puts a lot of Wall Street on notice. Going from 182, a relatively benign price target for Tesla, to 274 is a big deal. What's also pretty interesting about today's movement in Tesla, this 3.5% rally, at least at the time of recording this video, you actually seen UBS that downgraded Tesla to a sell from neutral, but they did raise their price target from $147 per share to $197 per share. So a little bit of good and bad news from UBS. Redburn Atlantic adjusts their Tesla price target to $140 per share from $130 per share, and they keep their sell rating. Mizuho Securities adjusts their Tesla price target to $230 per share from $180 per share. They also keep their neutral rating. In other big news today for Tesla, Tesla has introduced the Model 3 long-range rear-wheel drive in the US with a starting price of $42,490, about $35,000 including the federal EV credit, with an EPA range of 363 miles and 0 to 60 in 4.9 seconds. And Tesla stock at the time of recording this video is now up over 4%, breaking above $250 per share. Tesla has dropped the price of the white interior option in the Model 3 rear-wheel drive and long-range all-wheel drive from $2,000 down to $1,000 in the US. And as of today, Quicksilver is now available on all Model Y trims in the US. Previously, it was only available on the Model Y long range all-wheel drive and the Performance. And take a listen to what Grok had to say about the news that came out yesterday for Tesla. Grok says, in a shocking turn of events, Tesla's Robotaxi event has been delayed by a whopping 2 months, causing investors to panic and sell off their shares like it's the end of the world. The delay, which has pushed the reveal back to a still not so distant future, has resulted in Tesla's stock price plummeting to levels not seen since last week. Experts predict this devastating setback will set the company back a full 24 hours. And that's kind of what it seems like after Tesla's stock is now back in the green by a pretty large margin today. AI Driver on X says FSD 12.4.2 anticipates pedestrians crossing the street, and Tesla shared this and commented and says training on real-world data from millions of Tesla vehicles makes a big difference. Morgan Stanley's Adam Jonas says Tesla is a car company, but in our opinion, it is just now starting to get more institutional investor attention about its other capabilities, including energy, manufacturing, AI, and robotics. Cars are just one of many form factors of embodied AI and robotics. Morgan Stanley's Adam Jonas also says, quote, for the first time in memory, the majority of the more than 20 client Bull Bear Lunch attendees believe the next $50 move in the stock is higher rather than lower, with a majority expecting the stock to outperform the market through year end. He says at the same time, the vast majority of attendees said they did not own Tesla stock in their portfolios in any meaningful size. Adam Jonas says, just our opinion, but we think this dissectomy of a market that is prepared for the stock to go higher versus having low or no exposure is related to an acceptance that the stock is being driven by momentum and or factors that cannot be measured with any acceptable accuracy. The struggling car business, 90% of revenues today, can be measured and tracked. The AI, robotics, FSD, Robotaxi, and much of the energy business is still seen as too small to matter or does not produce the same quantum of weekly/monthly information to be tracked. This makes it difficult for some institutions to justify owning the stock in size. And there was one other thing about yesterday's lunch that I actually didn't realize until a client brought it to my attention later that afternoon. The core auto business barely came up at all. For 90 minutes, we talked about energy storage, humanoids, AI, FSD, China, geopolitics, and the August 8th Robotaxi day. The topic of cars was almost completely absent from the discussion. Faraday Futures founder said this about Tesla, quote, Tesla is the only dominant player in the US EV market, and a flourishing development of the industry is far from being formed. Holmar's catalog wrote on X, we haven't even gotten started with Tesla yet. I've realized even bulls don't believe that Tesla has solved autonomy yet, but it is becoming pretty clear now that it is a done deal. When your car can routinely handle 90 minutes in traffic with 0 interventions, you see it. Elon Musk comments back and says the amount of testing time it takes to figure out if the new AI is better than the existing AI as measured by miles between interventions is the limiting factor on progress. The better FSD gets, the longer it takes to find interventions. The Brandenburg State Office for the Environment was expected to approve the first part of Tesla's Giga Berlin expansion plans by fall 2024. However, local media reports hint that the approval will be delayed. And Tesla has released a few built for any planet clothing items, the tee costing $40, the hat at $35, and the hoodie at $85. I gotta say, I'm a big fan of this hat here. I'm also a big fan of the Tesla Mezcal that I ordered that's still not here. Tesla is offering 0 interest rates to Model 3 rear-wheel drives in Malaysia, while also launching low interest promotions. And for the first time, Korea has a Cybertruck that is driving on ordinary roads. And you can see here it was reportedly imported recently, which was found to have been imported from car wash company Come and Wash. And here is that actual image, since in South Korea you cannot buy a Cybertruck. Vehicle export data for the first half of the year in China is out. Tesla China is acting as a perfect export hub. Model 3 came in at a 99,144 vehicle increase. That is up 42% year over year, while the Model Y is at 49,162. And that actually saw Exports fall 56% year over year following the ramp up in Giga Berlin. So you can actually see the Model 3 is the second most exported vehicle out of China, and you do have the Model Y again that is a notable 49,000. Looks like the 1, 2, 3, 4, 5, 6, 7, 8, 9th most exported vehicle out of China. Option activity from big money today in Tesla stock is a little bit more negative than what we have seen recently. You're currently sitting at 44 different trades totaling $29.82 million with a positive order value of 16%. Here today for this Friday's expiration, you have volume of about 81% calls and 49% puts, so it's pretty neutral overall. And you do have Tesla short interest that still remains at multi-year highs of 3.8%. The dollar amount currently sold short in Tesla, keep in mind it has not updated for today, sitting at $25.37 billion. Which, if you include today's loss of $656 million, judging off of where Tesla stock is right now, the dollar amount that's sold short is still well over $26 billion. You do have 105.25 million shares that are currently sold short. Return shares today of 3.06 million. That means there is a couple million shares that are looking to actually cover today, which makes sense with some of the volatility we've seen today. And borrowed shares of 508,000. That means on net today, you do have about 2.5 million shares that are being covered. Global inventory numbers are rising today. Model Y is now at about 5,200, Model 3 at 4,300, Model X at 3,400, and the Model S at about 2,800. Google Trends data for full self-driving today is sitting at 20. Again, this is pretty normal what we see these days. Very good numbers considering prior to the free trial, you were sitting in the low to mid-teens at best. And that will be another big question that we want answered on the earnings call. How is the take rate now for FSD? Is it better, or is that going to help margins? What's going on with FSD specifically? And you can see Google Trends activity is actually increasing a little bit for the Model Y, going from 26 to 27. Cybertruck's falling a bit from 79 to 66. The Model 3 going from 25 to 24. The Model S staying at 11, and the Model X still at 9. So overall, very strong trend data, Google Trends data, that we see for Tesla products, which is the best indicator of what we have for US demand. And we can see today over on StockTwits, sentiment is extremely bearish today at 20. Not a surprise. You've been bearish from retail throughout this entire rally, and I think a lot of people today are even feeling frustrated because a lot of people rushed to sell out of their Tesla position yesterday. They rushed to buy puts, and now the stock's up 3%. It's frustrating if you try to trade Tesla. Don't trade it, as Jim Cramer would say, bad reference here. Own it. Don't trade it. That's Tesla, right? You don't want to try to trade the day by day. If you're worried on an uptrend, buy a put. But don't try to trade large positions and get in, get out with your entire position in Tesla. Not financial advice, but you run into things like this. Stock falls 7%. We don't even have the whole delay Robotaxi event confirmed or not. I don't know if we're going to get it confirmed. Maybe on Tesla's earnings, I would imagine on July 23rd. Elon could come out and say, yeah, that's false. We're still having the Robotaxi event on August 8th. And then what do you think is going to happen for Tesla? There's just too much risk in trying to day by day trade your whole position in Tesla. And I think that's what a lot of retail is doing. And I think that's why retail is very discouraged with this rally we're seeing in Tesla, which is kind of what an individual like Tom Lee has been saying. There's a lot of people that are still skeptical on this rally, so it has more room to run. That's what I would say about Tesla. There's a lot of people skeptical on Tesla. There's a lot of skepticism out there, and that probably fuels a lot more of a run for Tesla. At the same time today, message volume is extremely high at 78 today, and the participation ratio is normal at 54. And we will talk about a little bit more in the next video, my expectations for Tesla over the next coming months, and Again, you do not want to miss that video. Whether you're bullish, bearish, you sold out, you're back in, it doesn't matter. You want to watch that video coming out tonight at 8 p.m. Eastern Standard Time. And as we talked about previously, you are seeing a broad-based rally today. Market breadth is really improving. You do have the percent of stocks trading above their 50-day moving average today up to 65%. 6.5% of stocks today are breaking above their 50-day moving average. Yesterday, it was over 10%. So just in the past couple of days, you've went from a low of 35% of stocks trading above their 50-day moving average to 65% of stocks trading above their 50-day moving average. This is super bullish. I mean, I will say I'm still concerned about Apple trading at $232, Google and Amazon and Microsoft near all-time highs heading into earnings, but you gotta say, the broadening out is actually starting. And yes, I do think it will be selective. If companies have bad earnings, their stocks will get destroyed this earnings season. If companies have good earnings, they will soar. And I think that's really going to be the trend going forward. At least until we get the first Fed rate cut, and you probably at that point get a little bit of panic, some selling. It wouldn't surprise me. Or if the economic data turns bad, or if we get a new president stepping up to challenge Trump. There's so many different potential outcomes. We'll talk about it in the next video that could have a larger market impact and thus affect Tesla. But I gotta say, just looking at the markets here in the past 2 days, they look a lot stronger than they did a week ago. This is pushing up CNN's fear and greed indicator back in greed territory today at 59. Yesterday, you were neutral at 51. You can also see today, like I said previously, IWM is up about 1.5%. This is actually a new high for the Russell you have not seen since back here in 2021. The Atlanta Fed GDP Now tracker is sitting at about 2% estimated GDP for Q2. We will have some big data coming out next week, like retail sales, that looks like it's probably going to be in contraction for the month of June, and that will affect your GDP estimates a lot. And again, like we've seen, CPI came in really good yesterday, but that also means the economy may be slowing quickly, and that, I think, could be a concern for the markets later on down the road. And again, a lot of this optimism comes as investors are firmly expecting the first cut from the Fed, September 18th, 2024. There is a 90.3% chance we get the first cut September 18th. There's a 6% chance we actually get a 50 basis point cut or 2 cuts by September. That would be one later this month, or, a 50 basis point cut in September, and only a 3.8% chance that we don't see a cut in September. So September is basically a sure thing right now, unless something changes. And here today for your 10-year Treasury yields, they're actually doing a whole lot of nothing, up about 0.5 point, so almost nothing, and you're sitting at about 4.2%. On a technical basis, today Tesla stock looks great. We're kind of struggling to stay above that 250 level. It wouldn't surprise me if 250 now becomes a level of resistance, although we've been above it today, we're under it again, we've kind of been going back and forth around this level. Things do look pretty dang good for Tesla. Tesla did find support yesterday, today in the beginning of trading around 235, which looks to be that next level of support, which is right here. Look at this gap you had, this gap up on July 3rd. So it looks like you're going to hold support there. The only thing that really matters on the downside watch is you stay above this trend line, which that's at about 230. So you found support $5 higher than that. Things look great. If you fall under 230, under 225, a little bit more specifically, that's where things start to look worse. But you have reset your RSI. Your RSI is back to 69. The MACD still looks good. It's not falling over, it's not curling over too much, it's kind of stabilizing. So you've killed a lot of your momentum with that drop yesterday, which is actually good because now you could see a retake of the 270s and the RSI would still be lower than, where it was previously at 87. This is like what happened with Nvidia. Nvidia was on that momentum run, hit all-time highs, came down about 5-8%, and then retook all-time highs and kept running, but you reset all of your RSIs, all of your strength indicators, and that just gave Nvidia more room to rally. This has given Tesla more room to rally. And again, we'll talk about that a little bit more in depth. Again, my expectations in the next video. I don't think you want to bet against Tesla here. I'm not a financial advisor. I'm not a financial planner. But I think the risk is Tesla stock goes up from here, then goes down from here, especially with a market that is this strong. When things flip-flop and the markets get weaker and people get fearful, then obviously there can and will likely be downside for Tesla associated with that. But I have no idea when that's going to happen anymore. We still have like 2 weeks until we get your larger big tech names, your mega cap names. You do have Netflix next week, but is that really going to move the markets too much? Probably not. Again, we'll see. Those are like famous last words, I know. But you got a little bit of time here to kill. We got a speech from Powell coming next week, early in the week. That's probably going to be dovish. It's probably going to be good. Powell's probably going to set the framework for that cut in September. I think you want to just give markets a little bit of time here and give Tesla a little bit of time to work. When things do start to hit the fan, good news is I will keep you guys informed of what that is, what's going on, and where Tesla and markets are likely to go. But again, I still think you got some time here. Let the opportunity come to you. You don't need to chase it. That goes for the upside as well. I'm not exactly excited and, buying upside trades in our markets, just how stretched things are. But that downside could be a little premature. Now, Tesla, if you're not in Tesla, I think now is still a great time to get in because I am still targeting new all-time highs by the end of this year. But again, we'll talk about that more in the next video. That is going to do it for this video. Hit that like button and subscribe to the channel if you have not done so already. Thank you guys for joining me today. You guys have a fantastic weekend, and I will see you in the next one.